all the senior functionaries of Indian Express Group and in particular Financial Express, insurance industry's leaders and professionals, financial sector experts and media friends. Namaskara. Good morning to each one of you. It is a privilege to address this summit at a pivotal moment as the insurance sector now stands at the nexus of demand-side potential and supply-side opportunities as well as challenges. Today, the sector confronts a growth challenge but also a structural opportunity. The main question is, how do we serve 140 crore plus of our people with fundamentally different profiles, financial capabilities, behavioral patterns and risk exposure? And Mr. Sanjay mentioned some of them, that the way younger generation thinks, and India is a country with young population. Now, theme of this summit is very appropriate, and there's something which I really liked. When I said yes for this conference or this summit, I was not aware of the theme, but thereafter, when the theme came, I find that is very, very appropriate. And to my mind, there are 5 keywords here: thriving, era, evolving, customer, and expectations. These are the 5 keywords. But when put together, each one of them may have a different perspective for different stakeholders. And stakeholders are not necessarily in the order of importance, but shareholders, management, the economy. Economy is as economy, I can say the regulator is a perspective, but the government is a stakeholder, and then the customers. The challenge is that how do we create synergy between the perspective of these stakeholders and get the right sequencing? That is really the challenge for us. Now, first, let me try to share my perspective on thriving world, what the shareholder will be looking forward. And again, I'm repeating, it is not the shareholder perspective is the most important. To my mind, it is the other way around. Customer perspective is the most important, other is there to serve a customer. Thriving world, a shareholder will look for growth, top line, profits, the bottom line, and don't expect too much capital to be brought in. Least amount of capital, higher volumes, better profits. That is what the shareholders will look forward. Management, ease of doing business, flexibility in offering products, regulator not asking too many questions. That is what the management would be looking for. Nothing wrong with each of those perspectives. The question is, how do we synergize each one of them? Economy, and there again, as I mentioned it, regulator or the government comes as a proxy, saying that as a stakeholder for the economy, serving the real needs of the real economy, covering risks of individuals and economic entities all over the country, not just in large urban centers. Enhancing financial well-being, and there where the insurance sector comes, it goes beyond financial inclusion and looks at the financial well-being, giving that in case of risks also get covered, and contributing to inclusive development. The fourth and the most important is customers. I'll hold it for a moment because customers appear in these keywords somewhere later also, so I'll come to that aspect, and there are 5 expectations. Then we talk about the second keyword, era. India today is one of the fastest growing large economy with a per capita income of 2.5 lakh rupees. I'm rounding up the numbers per annum, and adding about 25,000 rupees every year in nominal terms, which is not a small amount of money. If every household, even in real terms, is getting about 17,000 rupees, it's okay. You can't keep it here. Okay. You can't keep it. It's okay. Adding that, then that goes into either a fulfilling a need or a discretionary spend. So it's not a small amount. We should appreciate that aspect. And the very average, we are talking about a per capita. So at least half of the people are earning way above that. So that is again a significant portion of our population. But in terms of era, what is our goal? A prosperous and developed India. India at 2047, we are characterized by health, long life, opportunities and social justice for all. Sabka Vikas. But where is the competition? Of course, there is a competition with world at large. It is a tough world. And again, as India is positioning and aspiring and working towards a large developed country, in terms of the space available, economic space being available on this little planet called Earth is limited. So we have to compete with other countries as well. But we have competition with other financial sector players within the country itself, banking, non-banking, capital markets. Apart from insurance, we are also providers of savings management. So that's a big piece in the life insurance business. And then, of course, dealing with other sectors which are the real sector people like health service providers, their interest and our interest, meaning our interest is not they are being synergy with each other. Then competing with ourselves, established player, newer players, insurer space, distributor space, that how does kind of a synergy works it rather than everybody trying to maximize one returns. Third piece on this era perspective is digital India. Young India, and meaning that India with a young population and digital India. Digital India, both in production, distribution and consumption of services. Today, the population is very well anytime, anywhere service. Don't expect a consumer to line up or present oneself at any place. That is the best way to approach. Then, of course, is a jam trinity, that Jandan accounts, Aadhaar and mobile, UPI, and participation in capital markets. COVID happened, but capital market people just kept on opening accounts and getting into that piece. Banks did it even earlier. The moment Jandan accounts were opened and the opening of the account, several other players, you do not have to come to the bank branch from where we will open the accounts and you can start operating those parts. Then the third key piece, evolving. There are opportunities as well as challenges are evolving and they are shaping the expectations. But I'm not sure what the organizers had in mind. It is evolving customers or evolving expectations, or both of them are evolving. To my mind, both are evolving. Customers also are, on one end, India is becoming younger for another decade, decade and a half, a very large young population. At the same time, at the upper end, is also becoming, more and more people are becoming aged. In a post-working age life is also adding up to that. The customers is also evolving. Their income levels are moving. So there's another set of evolution of customers as an economic individual to take a decision for this sector. And then, of course, their expectations are also evolving. Then when it comes to the customers, the fourth keyword, we are an aspirational society, aspirational country. And Honorable Prime Minister, when he addressed the nation on the day of India at 75 in August 2022 from the Red Fort, and I'll quote, "Today every corner of India, every section and strata of our society is brimming with aspirations. Every citizen wants speed. He wants progress. He is eager and excited to fulfill all dreams cherished in 75 years before his eyes. Everyone has to address this aspirational society, and we cannot wait longer for their aspirations," unquote. So that is an aspirational India, that aspirational set of people whom we are addressing it. And that is not saying that only the government is serving them. This is how the industry and the market addresses them and approaches them as a consumers. Now I come to the part of expectations. What a customer looks forward to in expectations: low premium, highest cover, high insurance cover. Third, instantaneous issuance of policy. Not give me the paper, I'll send the policy later. No, give me the policy right away. Hassle-free settlement of claims. And the fifth, competitive returns on savings. And that is a significant piece today, the life insurance part, which is about 2/3 of, today it is almost 75% of the total premium in the sector. And 90% of the life insurance business is nothing but a savings management. Rest 10% is on the risk part. That would be broad number if I have to put one number. But what is the current status, where we are? And while we get into some of the numbers, I'll say this sector has moved very strongly and achieved a lot. But Moving forward, there are opportunities as well as challenges. What is a growth? There is growing sector, but at a slow pace. In terms of new lives, even today, not more than 1/4 of the eligible insurable population has a coverage of one or the other. Number of policies in the last 6 to 7 years, new policies issued every year, have remained about 33 crores in a year. They have not moved up. Premium might have increased, but premium is not a reflection of growth of the sector in itself. Shareholder or the management may feel happy, but what that growth has been on a single digit, if you look at over a longer term. But in a developing economy, in a country with young population, to my mind, the growth has to be nominal growth of the economy plus 4 to 5 percentage point, and that to be sustained over next 2 decades. That's a kind of a number we should be looking for and working towards that kind of an aspiration and that kind of a outcomes to happen. Second piece, we have a high cost structure. And just to put 2 data points here, general insurance, I'll use that word. Non-life, I find it uncomfortable, being new to the sector, but still I find, hey, we are dealing with individuals, but we call it as non-life, how that can happen. But that is a sort of an adjustment for me. So I'll use it as a general insurance. General insurance, cost of procuring business and cost of managing the risk pool is as high as 30 to 35%. Now, with all professionals sitting here, any business which incurs almost 1/3 of the money for procuring business and doing business, and still rest has to take care of the risk pool, it is becoming then not an affordable premium, affordable level of services. There is a one piece. When it comes to the life, somewhat better, but still is very close to 20%, 19% industry average, or the big players, at least the top, which will take care of 95%, and not top 10 to 12 players. I am not counting LIC. I know that MD is. LIC is a different entity in itself, but leaving LIC out, meaning that not counting LIC, the top 11 players, their cost of doing business is 19%. That is even more problematic, because 90% of that premium is savings management, and those service providers are competing with banks and with capital markets. So there is a challenge, high cost structure. So as I mentioned, there is a competition with others. Now, in that context, with that perspective, traditional constructs of value, convenience, and trust are being now redefined by multiple vectors. As I mentioned, consumer diversity, technology adoption, macroeconomic stability, which provides a comfort, but that should not put us into a complacency, and emergent regulatory paradigms. It's not just the insurance sector, how other sectors are evolving in terms of the regulatory approaches and taking the sector towards a more consumer centricity and more value for the customer. So it is again in the regulatory space also, we have to position ourselves in a manner that we facilitate competition with other sectors, and competition is good for the economy and why everybody looks for an inclusive development. The contemporary insurance customer, whether retail or institutional, now seeks enhanced transparency, and this sector has to travel a lot of ground when it comes to the transparency piece. Personalization and agile protection aligned with multifaceted digital first journeys. Traditionally, we have posed India's insurance sector from the perspective of the lens of penetration. Rather, we should look at it in terms of the reach and affordability. Penetration, which is a factor of premium versus GDP, that will follow as long as we have taken care of what drives that penetration. But there lies also another challenge, that India is a large market, is a unified market, but when it comes to the consumers, they are not uniform. There are at least 6, 7 pieces, and 6 not pieces, 6, 7 different sets, if you can say that, we can put it together. First, I'll list some of them. Formal salaried class. Now, that cohort represents sophisticated demand for insurance aligned with human capital protection, and wealth accumulation. These customers exhibit high digital literacy, comparison-based purchasing behavior, and expectations for personalized products. Their constraints is not financial capacity, but product fit and information architecture. Second, the informal sector, including the gig economy. This cohort has largely operated outside formal insurance architecture. They require low-cost basic risk cover, whether for life or for health, income stabilization products, occupational accident protection, and disability coverage aligned to their episodic income volatility. Product experimentation is crucial in this space. Testing parametric income replacement mechanisms, occupational hazard bundling, and community pooled risk models. Mr. Sanjay mentioned that aspect is not linked with informal sectors, opt-in and opt-out, and we were having a discussion before joining in here. From customer centricity, that debate is very clear, that what option has to be there rather than a mandatory part has to be there. Third piece, third set of heterogeneity which brings in the class of people whom we are aspiring to serve is senior citizens and longevity finance. This cohort represents both a regulatory protection imperative and a genuine product innovation frontier. Fourth one, the emerging middle class. They can be the self-employed people, salaried, self-employed people, and others. This expanding segment, which is expected to be around 40% of urban population in 2033, occupies an economic territory where traditional mass market product prove insufficiently tailored and premium pricing structure generate affordability constraints. Next one is the high net worth, and I also learning now being in the financial sector more closer to the ground, there is a category called ultra high net worth individuals. Now, their needs are entirely different. This segment operates in institutional domain requiring wholly different product architecture. I will not spend much time, all of you are there that to understand their needs, and their needs gets understood the first, and the informal economy or those people are difficult to reach, and that is what the effort has to be. Then, very important and very significant, women entrepreneurs and MSME. Now, ownership of MSME, about 20% are owned by women. But a very large segment, especially in rural areas, self-help groups are largely women-driven. Now, that can be a good entry point into the rural economy to reach out to the women, as well as somewhat an semi-organized sector, at least semi for the purpose of certain economic activity they have come out. They are still informal, but somehow a semi-organization has happened. So, that is another sector. Then, of course, is a rural and semi-urban population at large. Our reach even today is on tier 1 cities, tier 2, 3 cities, rural area. Some of the schemes are doing very well. For example, PMJJBY or Suraksha Bima Yojana, or even I was surprised that even Postal Department has, which is not regulated as a government department, they have a rural PLI, Rural Postal Life Insurance, and they have about 65 lakh customers, very regular. Year after year, they take is an endowment product, simple one, and they claim, and on a first chance, it looks like to be that they are ascribing all cost, meeting all solvency, etc., competing with LIC in the same space and giving a better return there. Now, there is a lesson there that if the government department can do, private sector can do much better. So, that is another bit of heterogeneity coming up. Now, coming to product democratization and actuarial innovation, where the need comes in. Universal insurance coverage demands radical rethinking of what constitutes a viable insurance product. Our historical framework optimized around standardized sum assured products, annual premium cycles, and then we grapple with persistency. This is a key, there is a very oft used word in any insurance discussion. People's income vary. They may not have money for today's need. For them to say they will save and they will contribute for also an insurance cover becomes a difficult one. I am not suggesting one should go for a for a single premium. That's not the way forward. But factoring in that people's income whom we want to expand our business to, they don't have a steady source of income. So that is something we have to factor in, what kind of a product we offer it to them. Idea is to keep them engaged with them, not leave them, but provide a flexibility how they can join again. Some of the possibilities there, modular coverage and disaggregated sum assured. In our eagerness to provide better and better cover, we keep on improving the cover, saying that at some point of time it becomes unaffordable for large masses. So it has to be, or other two, there can be several things. All of you are there to innovate a basic cover and then add on. One can opt for a basic cover, add on, one can say, okay, if I have more income, I'll add on. If I don't have sufficient income, I'll leave add on for that year. I'll just remain on a basic cover, provide that kind of flexibility to come in. Then, of course, is the longevity products and indexed coverages. As the life expectancy is increasing, we have to factor in that now people living up to late 70s, early 80s, providing a product, a term insurance at the age of 30, a 30-year insurance, yes, it does serve a purpose. All working age life is taken care so that some support for the family will happen. But people are looking for a product that post earning age. Do I plan for 20 years? Do I plan for 25 years? If I've run out of money, what do I do? And this again become a nuclear family, that becomes society moving towards a more of a nuclear family. This also becomes a challenge one. Then how do I tailor that product for longer longevity? And that is a very positive thing, that any economy, any country looks for a people to live longer. So there is something, shift has to happen, that as India's longevity has improved upon, that product from insurance sector also has to suitably gets calibrated. And then, of course, is a big piece, which is 40% of the population being rural area dependent on agriculture. How do we take care of climate and catastrophic risk products? Increasingly getting into adaptation measures on climate risk. Climate risk is with us, climate change is with us, but it is for insurance sector to provide. We are the best suited to provide for adaptation. One is build infrastructure in a manner it can withstand climate change. Have climate resistance seeds and agriculture practices will take time to come in, but insurance can provide at one of the risk coverage measure based on a rightly priced product. Then comes the technological transformation and operational architecture. Mr. Sanjay talked about artificial intelligence. I will not go to that exotic potential coming up. But before we reach there, adoption of technology is for distribution of products. Several of the industry players have gone into that space. Or trying to analyze your own data to say that how you can price the risk appropriately. Or in some segment, limited segment, take the help of IIB and then try to say whether you can figure it. But otherwise, the database here, the industry-wide, the pool of data is not available for run any algorithm or to discern that which are the areas wherein the risk is emanating or the other risk has to be priced. So that is a one big missing piece before we come into that, whether we can use machine learning and artificial intelligence. First, building block. Just get into that part. India started with Adhara, built it. Use case was not known at that point of time. Use case came later on. Then in the last 11, 12 years, the use cases with support from the government, encouragement from the government, so many use cases have come and all of us are better off. The entire society is better off. So we'll have to build that kind of a foundational architecture. From the regulatory imperative, the customer centricity is the one which I'll suggest that we'll have to work very strongly on that aspect. And let me cover a few other areas as well. Today we need to work very strongly towards enhancing the trust levels in the sector. Value proposition for the customers comes in when they feel that, hey, I am giving this money for covering my risk. if that event were to happen, I should get the benefit or reimbursement almost instantaneously as soon as I tell my insurance company. Now, of course, there has to be verifications around, but we have to get those channels right, that how do we get that cover done. Otherwise, if the customer has to wait or do a runaround, then he says, what is the fun in, or what is the point in taking that cover at all. So, the claim settlement has to be a centerpiece of the work which we do. The last 2 days, I was sitting in interviews and trying to identify suitable people for insurance ombudsperson. Now, while that piece is working reasonably well, there is scope for improvement there, but the idea is why the cases should reach to an ombudsman person, which is a third tier. Things should end up with a insurance company itself. Consumer should say, hey, I have assume that I have taken a cover from a particular company and this company gives me the best service. I just leave a thought with all of you, not all of you, meaning that here, all of us working towards a scenario wherein the claim settlement through objective metric is known, is in the public domain. Some data is there, I have settled 99% of the cases. What about the 1%? What about the value of that 1% which has got lost? So, meaning objective, so the consumer takes an informed decision. That is the purpose is. Our purpose is not the regulator knowing that who is doing better or who is not doing better. Idea is consumer who has to put in one's own savings, spend one's own money to take a risk cover, can take an informed decision that if I take a risk cover, I am getting the most competitive rate and I am assured of my claim getting settled in a most efficient manner. So, that brings me to the disclosure framework, a lot of grounds to be covered. Some of it is happening, but a lot more action is needed there. So, in this context, I would like to propose 5 institutional priorities, and it's not saying that I am talking about anything new. This has been there, I am just trying to verbalize those thoughts. First, we operationalize customer centricity at all functions, whether it is product design, accommodating diverse customer profiles, claim settlement standards, enforcing timely resolution, grievance redressal accessible across all customer segments. Even today, all customers, their access to a grievance redressal is not the uniform one happening. Just to say how many of, and including IRDAI, making that information available in a regional language. Equally important, we just can't say that India, we can work in such a large country on English and Hindi and maybe one couple of other languages. Meaning that name the state and my product is available. We have to provide that kind of interface being available. Then financial literacy integration supporting informed decision making. Just to again mention, today this our industry collects a premium of about 12 lakh crore. Not, as I mentioned it, not all the risk, large part is the savings, but what is the total spend on financial awareness creation, advertisement all put together is 4,000 crore. All industry put together. 4,000 versus 12 lakh. Now, in any other service industry, spend would have been a lot more. Of course, how to use that money is equally important, that we should not, it is not just putting, sorry for getting into this, putting on a print media or electronic media, etc. There are different ways of, effective ways of reaching it out there, and there, including in the authority, we have a lot more work to be done in that space. Second, so relating with this, to my mind, this bringing customer centricity will require significant reforms in the sector, both at the insurer level, distributor levels, and even at the authority level, that how do we interact with both the providers in the space. To take the sector to high quality, moderate cost, strong value outcomes for customers, and positioning in the competitive economic space of long-term sustainability. And here, I can't resist but to recall C.K. Prahlad. It is not just reaching bottom of the pyramid. Even to look at moving from the top first quintile to second and the third quintile will require us to move towards very good quality service, but at an affordable cost. And I'm not saying that the fourth quintile has to be left behind. There is a different strategy is required, because for them to have enough surplus to buy an insurance cover can be even more challenging. The second, establishing innovation and technological governance. Expanded regulatory sandbox and principle-based framework enable market participants to experiment with product distribution models and service architecture. As I mentioned it, while we talk about the technology, but the building blocks of using the technology, we are yet to put in place. Banking sector has put it together. Capital markets have put it together. Insurance sector is a good digital public infrastructure and foundational infrastructure for technology use in insurance. We are making a beginning. We have to travel in that direction, and I expect to work with all the industry players to move in that direction. Third, improving corporate governance in the sector for realizing the gains of flexibility and accountability. And I would recall, it's not saying that it is a patchy, but when we compare ourselves to, say, banking sector corporate governance, way superior, and a lot of efforts have gone in, but and former chairman of SBI is with us. The kind of a corporate governance standards, board-driven self-regulation rather than a regulator-induced, regulator-imposed regulation kind of a thing. So we have to travel quite a bit of a ground on corporate governance. At no point of time I'm saying corporate governance is bad, yes, but in terms of a standard where consumer says, hey, this company, I don't have to bother about it. This company's product, whatever is written, I get the same thing. I don't get anything else. That is what it has to be. Otherwise, just to understand the product of a company, the life insurance, it's difficult to make it out, that what the product is really offering in terms of the returns. Fifth, advancing institutional maturation through international standards alignments, better use of accounting standards, and also optimum allocation of capital. And then we have a work to do from the authority side as well. Getting more capital is not the solution. Getting right amount of capital is the way forward. So for realizing the goal of insurance for all by 2047, we need to set intermediate milestones. It is easy to talk about 2047. What about this year? What about next year? What about 2030? What about next one decade? Because human mind, we can visualize the uncertainties of today and can say, we have a visibility for next 1 year. This is with 99% certainty. Move over to 2 years, it will become 95% certainty. That is how I keep on adjusting my strategies, my action plans. Each one of you have your business plans, but we can't be having a very long term unless we get into intermediate milestones. But our strategies and services must meet the customer expectations and economy's needs at all times. So again, I'm drawing upon this, that on this, not here, that it has gone for that theme, customers' expectations. That is the key word where we have to do. Thriving part, not from the shareholders' perspective. If the customer's expectations are met, shareholders' expectations will also be met, unless shareholder is looking for next quarter results or next 1 year return or looking for an exit. That is a different set. But if you're looking for, here's an industry which works on a patient capital, if that kind of investor is there, he will say, customer is happy, my shareholder will also get happy. So insurance sector has a potential to contribute substantially to India's development trajectory through fundamental risk mitigation, enabling millions to invest in human capital, productive assets, and family security with reduced catastrophic downside exposure. That contribution will not emerge through regulatory mandate alone, but through competitive pressure, technological innovation, and the institutional creativity of market participants responding to genuine customer demand. And when I say institutional creativity, that institution is not IRDAI. Institution is your own company, your own board. That how that board takes the ownership and saying that I'll drive the creativity. As the head of the regulatory authority, I look forward to work with all of you in contributing to achievement of the goals for a developed India. Thank you very much for your patience.